Good afternoon, everyone. You're all very welcome to another market update video here at the Alpha Capital Group. So today we'll be looking at price action, digesting some of the moves through the course of this week in all assets, not just obviously the main stock markets, but of course looking at dollar, DXY, gold movements, and certainly looking at some of the FX pairs as well. So this week has seen significant volatility, we must admit, particularly in the dollar pairs. We've seen DXY kind of grind higher steadily through the course of the week. We have seen stock markets, particularly in the last 24 hours or so, gain some significant traction to the upside. So that usual kind of correlation has been kind of somewhat disenfranchised this week, as of course we've seen dollar progression and of course indice progression as well. But we'll look at that on the lower time frames as well, kind of reacting and reiterating some of these movements as well on the lower time frames. So I suppose without further ado, obviously looking at the price action this week, we've had a fairly volatile, as I said, week this week in terms of market dynamics. If you were to look at the economic calendar for this week gone by for a second, you will see quite a lot of data points this week, particularly Tuesday. Wednesday, there was quite a lot of information out in the markets, and that was very observant. We had BOC consumer price index, inflation in Canada. We had US retail sales, we have European growth figures. So there was kind of a lot of fairly significant economic data points through the course of this week. And I think as traders, you need to be very kind of reacting or realizing of what's kind of ahead of you, regardless whether you trade news, regardless whether you trade data, or regardless whether you trade just specific price action in the charts. Because, of course, what happens around volatile or heavy data events, you tend to see that kind of initial reaction, and then some people or some traders are then questioning or kind of scratching their head to say, well, what's happened here and why? So it's important to, as a trader, to have as much information at hand, regardless of, as I said, whether you trade these data events or not. Even migrating, even if you don't trade data, don't trade news, but actually protecting your account, mitigating the risk, reducing the risk in your account, protecting that account as best as possible, and obviously trying to navigate around those data prints, those volatile data events. Now, of course, this week we have seen, as I said, a lot of data prints Tuesday, Wednesday, even Thursday, yesterday as well. We had Aussie data overnight. We had monetary policy reports. And this week, across the board, regardless of the central bank that's operating, we've had a number of central bank speakers, right? So regardless whether it's the Fed, whether it's ECB and Lagarde, whether it's the Bank of England, and hearings, or obviously Governor Bailey speaking as well. So this week has been quite choppy, and of course this afternoon the data isn't even over. Why? Because of course at 4 o'clock today, Fed Chair Powell is on the wires again. So please do be aware of these volatile data events, commentators, speakers, central bankers, etc., because you will get decent volatility. And traditionally, Fed Chair Powell, for example, does tend to move markets quite traditionally with some of his commentary. So it's important to be wary of that, be mindful of that, mitigating the risk, as I said a moment ago, and being in a position where you can protect your capital at all costs. It doesn't matter how long it takes to get funded or how much money you make, but realizing that you only have so much capital to play with every day, minimizing or reducing or controlling that risk exposure on a daily basis, and building that confidence, building that discipline, which is uniquely very, very, very important for traders. Now, as we look at the markets this week, as I said, the big cross point really has been that escalation in dollar strength, right? You look at the DXY this week, what has been the big telltale sign? We have seen significant rallies to the upside. We had initial bump and run into last week's close. Monday, we did see a little bit of a pullback, but really since about Tuesday morning, up until obviously overnight last night, we've seen dollar strength continue. We've seen the DXY ramp higher. We've gone from this kind of 102.20, 102.30 level all the way up to this region up here around 103.60, 103.50. And if you dial up to the daily time frames, and we'll look at the order flow now in a second on the lower time frames, but on the daily time frame, massive break. So we've been in this kind of gradual grind lower into this consolidationary state where we've been for most of April and for the first 2 weeks of May, up until this week where we got that aggressive breakout to the upside. So at this point in time, it's of course really focusing on the order flow, right? So that's another important aspect within trading, is being able to focus on the order flow, being able to have rationality in terms of what you're doing, why you're doing it, and being able to say, well, realistically, 1 hour, 15 minutes, whatever time frame you're utilizing, this is what way the price action is currently moving under current market conditions, under current market circumstances. And as we see, as we've alluded to, From Tuesday, we've gone from this 120, 102.20, 102.40 level considerably to the upside and making successive highs. So we made successive highs yesterday morning into obviously the London Open, and we have reiterated that as well by creating another top today overnight. As I said, yesterday evening into last night, creating that top at around about 103.60. Now, as we look at the order flow, this is where I suppose things become a little bit intrinsically more on a deeper level, deeper scale. Okay, so we've identified, I suppose, these crossover points in sentiment is very, very useful to identify if there is any sort of pullbacks, if there is any sort of relief rallies to the downside to mitigate those kind of trending movements, those retracements. Most likely these are going to be areas to kind of focus on. And we've seen quite evidently on the DXY that we've created that top of 103.60. We've created a downside pullback, something like what we saw here Monday into Tuesday. Didn't quite get back to this value area, this short-term area here around 102. Before creating to the upside. We've got a similar scenario here whereby in an ideal circumstance you'd love to see the price action really getting back down to mitigate all of this order flow. So all of this order flow that's been created on the upside, you'd really like to see all of that being mitigated, whereby price action at least mitigates the volume, mitigates the area of liquidity within the markets. However, that hasn't really happened. Well, not as yet anyway. So as we look at price action today, we're really kind of stalling here at around about this 103.15, 103.20, where that previous high was established. You can kind of see it here, previous high, bit of a pullback, consolidation, and then we break out to the upside, creating additional trend dynamic in that regard. So now I suppose it's really a case of, does this level actually break through for a deeper runoff all the way back to this level, or does this area here now hold up for that next run up to the upside? And that's really just the best thing to do. This is how you develop patience, this is how you develop discipline, by identifying where do you want to get in on your terms, meeting your conditions, reiterating your trading plan, rather than you FOMOing in and taking positions where you think the markets may have left the building. Okay, and I think that's really, really important as well. Now, even the likes of the order flow scenario here, even simple things like fibs as an additional confluence can be utilized very successfully and very sustainably. Okay, so if you look at it here, we've gone from, as I said, this kind of bottom consolidation here on 102.80 up to the highs. We're pulling back. So naturally enough, somewhere down here is where we would like to see this brief retracement that we've seen overnight end for the next run up higher. Now, of course, as I said, we tend to look at price action in a more open-minded mindset of, as I said, identifying those crossover points in dynamic, in the trend, and the price action. And then also, as I said a moment ago, waiting and being patient and being disciplined to say, well, this is where I'm entering, this is why I'm entering, and making sure you have that clear follow through. If you can develop that clear follow through, you're much more likely to be successful. So that's kind of where we currently stand on the DXY. Now, if we migrate across to the likes of some of these assets, Euro USD, GBP USD, we're going to look at these markets now. Price action is just currently loading. Now, just where we're waiting for the FX markets to open up, I'm going to look at gold as well. So if we look at gold firstly, so if we look at the gold dynamic, okay, so this is kind of where things become very, very important, okay, because we've talked about gold dynamic. We've had on the daily time frame a very, very, very aggressive gold move in the last number of weeks, right? So we've gone from middle of March, we've gone from this 1800, 1820 level all the way up to 2000 and 2050, where we've been mostly for the last couple of weeks, okay? Now, the first thing here we kind of have to look at is, well, overall trend dynamic. We've had very aggressive run-up with very, very clear order flow. So you get an initial aggressive spike, and then you become a little bit more trending-like. And this is no coincidence that the daily is creating that type of structure whereby, as I said, we've got aggressive move higher into highs and lows, highs and lows, highs and lows, where we get that gradual grind. Right, so we've gone aggressive straight line buying into a gradual high and low scenario, whereby now we've created top formation up here at 2050. We've taken out the liquidity from this region here this week, or actually from the early parts of May. At what level is that currently at? It's roughly speaking the beginning of May. Okay, so this kind of 2-3 week period of where we broke up, created new highs, grind it back down. We've taken out this impulse. And we've also taken out this impulse here, right? You can kind of see here price action starts to grind up. We then break out, get that secondary leg back to this value area, one final push, and then the house of cards broke this week, whereby we took out the 2000 area and we've just continued to grind lower. Now, at this point in time, you have to look at the dynamics within the price action. So we've got lows here, we've got lows here, we've got successive highs here and here, and we've got most recent highs here. So if you're looking at this now, we've gone from aggressive buying, as I said, into trending price action, whereby now we've broken structure. We've taken out structure within the dynamics of the markets. And this is where it's important realizing of what you think is going to happen v what is actually happening. Okay. And that's why it goes back to your trading plan, making sure that you have confluences built in, or there's certain things that you look for within the structure of the price action to allow you to understand what's happening, why it's happening. And if a certain move has happened, where are you then looking to enter, or where does your bias change, whereby you can then potentially plot a trade. So in my condition here now, given that we've gone from highs and lows to now creating a new low, well, the most logical scenario is now next week we probably see a rally in price action, most likely back up to some of these levels, right? So you've got your final daily area there is around 2040. We had 4-hour mitigation, obviously. Last week we talked about it into last week's close. Then we had the break of the 2000 levels. So at this moment in time, if we are to see any sort of pullback to the upside, the selling bias is probably going to come in somewhere around here, most logically, because of course we've had a 3-day selling snap into new lows where we've taken out this structured area here in yellow. All of this bottoming price action has been taken out. So therefore, wait for the pullback, wait for the retracement, see if we can get a move back up, and then you're off to the races with more potential selling bias. Now, if that doesn't happen, let's say potentially that doesn't happen, and let's say today we close bearish again, whereby we end up taking out this area here, around 1940. Well, all we have to do is be able to say, well, if that happens, that happens. There's nothing we can do to stop that, right? As market dynamic, as participants, as traders, your goal is to identify where the price action you can foreseeably or possibly get into, okay? And if it does break through, again, you follow the same approach, waiting for that structural bottom, wait and see maybe if there's a counter trend, maybe short-term order flow position, maybe down here, maybe 1 hour, 4 hour, etc. And then you've got potential buying back into, as I said, this liquidity area for then the next phase of selling snaps. So it just really depends on what time frame you're utilizing. So counter trend, higher time frame dynamic, or what they call the swing structure, or whether it's actually the internal structure of price action. I think that's really, really relevant as well. Okay, so that's gold. If we look at Euro USD, a kind of very similar formation. Okay, we've had formed bottoms here, clear accumulation, breaks up to the upside, back into this value area. So if you see this here very, very, very clearly, this is just beautiful price action. Breaks the structure, back down, reacts off the value area, massive grind higher, then into steady order flow, gets that grind, gets the consolidation, gets the accumulation, and then since then, we've broken through. So this is the other side of the equation where you don't get those moves back, you don't get those pullbacks to value areas. So of course, you've got here accumulation, you've got aggressive breakdown. We didn't get back up to this 109.80 level, even 110. You've got an order block point of interest here at 110.25. You've got one up here at 110.80. You've got shorter term decisional area here around 109.80. And then of course we've just continued to break through. And of course you've got a fourth area here at 109.20. But the big problem is none of these areas are getting mitigated. This area here isn't getting mitigated. This isn't really. This area hasn't. And if you're following the order flow, this hasn't either. And even now, more poignantly, even in the last 24 hours or so, we've created additional bat of bearish price action, whereby we've left this area as well at 108.40. So all of these decision areas, none of these are actually getting any sort of retracement back in, which shows that the overall bias in the dollar fundamentals at the minute is very, very strong. And we've obviously talked about that as well on the DXY, which has had that just consistent steady breaks continuously. So that's really worth watching out for, to see if there is any sort of pullbacks, if there is any sort of retracements at all, accordingly in reflection of that as well. Now, if you trade 4 hour and you take this big area here and not this smaller one, you've just about seen a mitigation at around about 108.25. Now, me personally, I probably would have liked to see a little bit of a bigger swing than that, because of course you've got a little bit of liquidity here. We started to sell off during the Asia session last night into the early parts of into yesterday morning. Very, very clear sell-off, bottoming formation, and we're starting to pull back. So at this point in time, I would still be kind of conscious of to see is there any sort of reaction from this short-term area here, rather than just the 4 hour level, which did reject perfectly at the wick as well. So worth keeping an eye on that. It really just depends on what you look for within your dynamics, within your structure. Different people interpret different things. Some people trade higher time frames, some people trade lower time frames. It's really all just going to be reflective on what you look at and your interpretation within your trading plan. Now, moving across the cable, and this is something that I was actually looking at last week, whereby We've, again, kind of like Euro USD, kind of like gold, steady grind higher. We've broken through. So even here, this value area of lows here at 124.50, completely broken through. Pop back up into this 125 level, mitigating this area. So again, applying fibs. If we apply fibs from, let's say, wick top to wick of this candle here, you'll see very, very clear reaction. Back up beautifully. Now, of course, let me just isolate this price action for a moment. You can see that there, lovely. Okay, we've bottomed out. We've taken out the lows of liquidity, back up into value area, clear reaction, sold off again, new lows, and we've come back up, and we've just missed this candle here. So around 124.70, we've only missed it by a fraction of a point. Now, if you trade 4 hour, it's perfect. If you trade lower time frames, even less than that, you wouldn't really have got an entry, because of course the 1 hour would have reflected and say, well, we've got high, low. Therefore, if you were looking at 1 hour price action, you'd be isolating this. Okay, and you can see very, very clearly that, yeah, we did get to 61.8, but didn't quite fill or mitigate this area of liquidity here. So this could still yet be filled. So it's just a wait and see to see whether the price action actually gets back up into this 124.85 level. If it would, it seems to be a nice little area for selling. But of course, the market dynamic is changing very, very quickly over very, very short periods of time. And you've seen that in gold. You've seen that in DXY, right? 1 minute we're heading lower, then aggressive break. We form our top, fairly significant pullback. And that's been noticed across the board, broadly speaking. Now, last on the FX pairs is this Aussie USD. And we've talked about the Aussie USD as well last week. Again, the big thing I would say here with the Aussie is accumulation. So we have equal highs multiple times. So if you were, let's say, a retail trader, okay, and you trade off of supply and demand specifically, you would maybe have shorted here, but most likely you probably, if you were trying to short this back down into this region, you probably would have got taken out on this wick, right? So this is where manipulation tends to occur, where we take highs of a region and then very, very quickly U-turns back into that zone that it came from. So you can see here very clearly where it broke out, back down, clear false break, taking of liquidity, stop hunt back down to value area. So we've taken out this 4 hour here at 66.30, but this week I was more focused between 66 and 66.30 because you've got 4 hour here, which has been mitigated, and you've had this short-term decisional area here as well at 66.30. So as far as we're concerned, all of this liquidity on the 4 hour daily looks to be pretty cleaned out. If you go to a 1 hour chart, you will see over here that there is one last little area around 65.95. So should we see one final break to the downside, you'd then be looking at this region being challenged, tested, or being maybe a focal point for price action. Now, if you're looking at AUD USD, and again, this is where the ability to read price action is also quite important, right? Because the trend is your friend at the end of the day. And you can see here, unless we get a break of structure where we get a break of movement of said trend, therefore you're still technically looking at a short bias, because of course, as I said, we've got movement back into value area. We've had short-term highs, another lower high off of lows, and then a break. And then what's happened today, ultimately we've come back up to this region here. So if we isolate price action again on the 1 hour charts for a second, you can see it there very, very clearly, because we've got lows, highs, marginal lows, highs, new lows, back up, rejects this area perfectly. Okay, so 66, 68, we haven't broken above it. So if you were looking for a bullish dynamic, really you'd like to see price action take out this region here, and maybe even potentially take out this region again, whereby we break up like this, or maybe like this, back down, create new higher lows, change a trend dynamic, and then you start looking at that move. But at this moment in time, it hasn't really happened because of, as I said a moment ago, we've come up to this value area, 1 hour, reacted it beautifully, and we've seen fairly decent selling. And that's only on 4 hour, 1 hour dynamic. If you go to a 15 minute, let's say, for example, you can see it as well, where you've got highs, nice little bullish order flow, highs, lows, highs, lows. So if you were looking at the internal structure on this 15 minute chart, let's say, for example, you'd maybe like to see something like this happen, whereby we take out this cluster of 15 minute lows or bottoms around 66.45, create that internal break structure, back up again maybe for one last bump at 65.80, 65.83, and then maybe try that secondary or tertiary short. Okay, so that's how you'd look at the order flow, right? And that's reflecting or correlating the swing and internal structures, making sure that regardless of what time frame you use, you're giving or you're building those confluences that can signal stronger analysis. The stronger your analysis is over the quantity of trades that you take, the more you're developing an edge, right? This is what they call in trading developing an edge, right? Lastly, then in the FX play, we've had this massive run up in gold or in dollar yen, right? So we talked about it last week, back up to this apex, down to the value area, accumulating. We did get this initial flag higher, nice little bull flag, back down, reacting off of this 133.80, 134 level that we've talked about in multiple videos for the last week or two. And we've seen that very clear, significant run up. So we got that move back up, then took out this bottom, hung around for a little while, and then just started to rallied all the way up, create a little bit of a bottom Monday night into Tuesday morning, and since then it's just been bullish price action all the way. We've taken out this area here at 127.30, 127.50, even up as high as 137.70. So if you look at the 4-hour bars, you'll see that nice little high here has been completely taken out. So we did reject it initially, and then sentiment has just completely taken it out, and we've continued to push higher. So at this point in time, you really have to go back up to your daily and say, well, we've gone from apex structure again, aggressive apex buying, selling, break of structure, taking out this order flow, back down again, mitigating this daily here at 130 perfectly. And since then, we've just been chugging along to the upside. We've making successive highs. We've taken out this high here. We've made new highs this week. And now it's really just a case of seeing where does this actually end, right? Where is the kind of the short-term high, right? Like what we had here, for example. Let me just remove this for a moment. Just remove that for a moment. So like, for example, what I was saying there a moment ago, where we have this high here, where do we get that inflection point whereby we create another higher high, shall we say, in broader daily trend, and then get the next pullback, okay? And that's really the golden question here, because, of course, as I said, we've taken out the December lows, we've taken out the March low, so we've taken out the December and yearly highs, effectively year-end highs. We've taken out the March highs, we've taken out the April/May highs, and now we're working ourselves back up to where we were in October, end of November time. So at this point in time, if we do take out 138.50, which it looks like we may do, and even as high as 139, then you're working back up into that 140 territory, 140, 142s, whereby you can then start to assimilate over time, are we more likely going to get back up into this 146, 147 level, right? We've got liquidity areas up here. You've got a daily area of liquidity at 149, just underneath 150. You've got another one here at around about 147.75. You've got a third one here around 146-ish. So they then become very likely upside targets in the, let's say, the next 3 to 4 months on progressional price action. So then you're saying, well, broader trend is now clearly bullish because we're creating new highs and lows on multiple time frames, multiple dynamics, whether it's shorter to medium or medium to higher. And then you just have to identify that trend, wait for those pullbacks, wait for those retracements when they come back to mitigate those shorter term value areas, and then you can start to exploit that within the price action. Simple, having clarity, waiting for the price action to get to your levels, and then being able to really take advantage of that accordingly. All right. Now moving across the indices to wrap up the week. Quite a detailed call this week, just to kind of wrap up broadly. We've seen a bit of a disenfranchising. So what we talked about at the beginning of the week was the stronger dollar with indice movement towards the last couple of days or so. The indices for the last number of days, actually not even just number of days, more likely for the last week or two, has been very choppy, has been very sideways moving. Until really yesterday, right? Yesterday we started to see that little bit of progressional upside price action. Wednesday we started to see it initially, and then Thursday, once we broke out through 41.50 on the S&Ps, we had that break of 4,200, and 4,200 is literally the top that we've had since February. Right? February top into Valentine's, then of course April into end of April, month end April, we were at highs of 41.80. We've now broken to new highs, and that again brings in the bullish dynamic of where is the indices going now. Well, at this moment in time, we've been very topsy-turvy for the last couple of weeks. We've been very up and down, clear price action, highs, lows, accumulation, and it looks like now, instead of coming back down and maybe mitigating some of these areas down here at 39.50, we're completely breaking that through. We're continuing to the upside, and we've taken out 4,200. And at this moment in time, you then have to start looking at, well, where are the key levels? Well, where are the key areas? Not just levels, but where are key price action structure? Right, you've got an area here around 4,300, right, 42.80 to 43.20. It looks like now we're just going to get that continued run up to this region, and that's the most likely scenario now, which is the August highs. And then above that, then you've got correctional of this massive daily trend that we've had all through 2022 into really the autumn of 2022, September, October, we found that bottom at 3,600. And that's really the focal point now. But at this moment in time, indices are still very much in control to the upside. Right, you look at shorter dynamics, you've got, let me just tidy this up a moment, you've got highs, you've got structural April, end of April and beginning of May lows at 4070, 4060. We've then broken through, we've taken out this high. So if you're looking at this as market structure, you've taken out this high at 4185, 4190, but in fact we've taken out the psychological level at 4200. So now it's a case of seeing, well, we've broken to the upside. Wait and see. Well, it probably doesn't make much sense buying up here now. Okay, it makes more logical sense to wait for the price action to get back into maybe this area here around 4160 or maybe this area here at 4130, like so, and then seeing if there's any sort of buy-in reaction from here. Right. Generally speaking, after you make a new high, if the price action isn't really kind of echeloned and being continued to the upside, you'll get a little bit of a chop, you'll get a little bit of volatility, most likely profit taken if it's a massive area that's just been broken, and then you're better off waiting. Now at this moment in time, we are still grinding higher. So two scenarios is we just continue moving progressionally to the upside without any sort of retracement, and we just get up here to this 42.80, 43.20 level. Our second scenario is now waiting to see, can we get back into maybe some of these levels here or down here, and then look for that secondary wave. That's the most likely scenario at this minute, right, given the way current dynamics are within the markets. All right, so that's the S&Ps. Now on the 1 hour chart, if you were to say, well, you've got nice liquidity down here and then a secondary area here, you've also got consolidation here as well. So if you look at, if you're an intraday trader and short-term trader, you then have to look at, well, from yesterday's highs or last night's close, in through the Asia session, in through pre-market, and of course into the US Open now, which is 5 minutes away or coming up to it, you then can say, well, we've had consolidation, we've broken out through the Asia session. So you also have a short-term area here at around about 42.05. So it's only, for me, I tend to trade, I prefer to trade higher dynamics because it just gives me that little bit more of reassurance and certainty, personally. But if you are a day trader and you trade shorter time frames, then you're looking at your value areas on the daily level, right, or on the intraday price action, and that's really coming through at around about 42.05. So it's all reflecting back in terms of what do you look for, what suits you better, what better suits your personality, and then being able to apply that. But that's something to watch out for there as well, around 42.05. And I'm actually, funnily enough, I might just set a wee alert at that level. Moving across the NAS, last couple really for the week. NAS this week has been just truly remarkable. So this was the week previously. First week of April, we've had consolidation. We took lows, we took highs, back into 4 hour value area, daily value area here at 12,975, 13,000. Since then, we rallied all the way up. Now this week I was looking at, or kind of more focused, and I mentioned it briefly last week, this area 13.6 was going to be pivotal, right? Around 13.6 to see, would we see a reaction or would we see this top? This, of course, is the August top. And as you'll see very, very quickly, this liquidity area has been mitigated perfectly, and price action has actually broken through it. So we've completely taken the highs at 13.7 and we've progressed higher to 13.850. So now it becomes an order flow scenario whereby, right, we haven't reacted off of this, we haven't rejected it, we've just broken straight through. So obviously bullish control is still very much there, still evident in the markets. We're talking about that in all the indices. Now, when you isolate shorter time frames, you've got multiple areas here, right? You've got 4 hour at 13,000. You've got another one here. You can even plot these out like this. These become decisional areas. So then it's just a case of watching to see if there's any sort of reaction from some of these zones, right? So if you're trading 4 hour or lower. So you've got 4 hour here, 13,200 as well. There's another one. There's a little bit of chop and volatility. So we've got a spike. You've got it back down. Maybe you've got an area here around 13,400. And then you've got this massive aggressive break up here. Short-term time frames, you can even focus that in the 1 hour. Aggressive rally to the upside, leaving this region behind. So this was the Wednesday overnight trading session into US Open yesterday, Thursday, where we had that massive rally through 600s, through 700s, in fact, all the way up to the highs of yesterday into last night's close at 13,900. And since then, we've had that apex, sorry, wrong tool, very, very clear structure to the upside. And now we're seeing, are we going to get that flag back down? Are we going to get that kind of flag all the way back down, maybe into here? And that becomes the most pivotal question you need to ask yourself into this weekly close. Let's say we close back down here, well then you evaluate it, should I say, on Monday, and see if there is any sort of reaction down here around 13.6. Otherwise, then you're just being patient, you're being disciplined, and just waiting to see where does that retracement end. Because of course, as we know at the minute, trend is very much bullish. So whether it's here, or whether it's maybe here, for example, or whether it's some of those 4-hour levels we talked about down here at 13.2. So you've got 400, 450. Nice little 1 hour, 4 hour area. You've got a 4 hour zone down here. You've got a 4 hour zone down here as well. So it really just goes back to what are you looking for within your price action. Now, finish on the week. Dow Jones has also been on a rally. So we're seeing that across the board, right? We've had nice little order flow this last week, Wednesday, Thursday, Friday. Nice little clear order flow. We formed bottoms on Tuesday of this week here at 33,000. Nice psychological round number. We did create lower lows because, of course, if you're looking at this, you'd see, well, if you trade supply and demand, you'll say, well, there's a buying opportunity there potentially. If you trade order flow, which is low, high, low, high, low, high, low, sorry, high, low. So low, high, low, high, low, high, low. You'd then be saying, well, there's a break of structure here marginally. On the 1 hour, it's not, but on the 4 hour it is. You'd say, well, is there any sort of reaction here around 33,300? And of course, yesterday, we broke through, we consolidated, and then today, last night, into last night's close, we got that secondary follow through all the way back up to where we were last week for really the CPI data, the CPI sell-off that saw indices actually sell off a little bit. So Dow Jones is really back to where we are at this point in time. And then it becomes a case now, how does the markets reflect that? Okay, so if you're looking at 4 hour dynamic, you've got value area over here in yellow, taking out all of this order flow. We've got even tops here from a supply and demand perspective, 33,500 completely broken out, massive movement to the upside. So you're basically evaluating today, well, do we hold this 500 level and pull back down most likely into this region down here on the Dow Jones, or do we hold this short-term intraday value area from the overnight Asia session? And then you're looking at that accordingly and saying, right, price action has been consolidated into yesterday's close. We've got a little bit of a run up pre-market all the way back down. You're evaluating this value area here. So you've got value area between kind of 520, 550, most likely probably around about 540, 550 is really the accurate area. Then you also have this secondary runoff in the 250s, 280s, should we see a deeper sell-off today. And then it just becomes patient. Well, if we break through this structured area here short term, most likely price action is going to migrate back to this area because we've got this buy side imbalance. And that's exactly what we're looking at into 230, seeing if there's any sort of reaction here to go higher, like so, or whether we take these lows out and progress back to the downside. And it's just as simple as that. European indices, lastly but not least, is the Dax and the FTSE. FTSE very choppy this week, so this was the range at the beginning of the week. Consolidation, takes highs, breaks through the downside structure, creates a couple of gaps during the week, flags all the way back up to this level here at 77.85. Right, so more poignantly, you've got 77.83. Now that's on a 1 hour, so I'm just going to change this to a 1 hour. There was a 15-minute as well, mitigation on the 15-minute liquidity. So it's really just evaluating to see, does this 77.80 to 7800 actually hold up? And we talked about it last week, potentially continue just to chug along to the downside, or what? You kind of look at it there, you've got low, high, kind of looks like a bit of an inverted head and shoulders, but I don't tend to trade those too often. I'd stick with the order flow more so, because you've got low, high, short-term internal break, back up to short-term internal structure up here, mitigating this value area. Therefore, if we were to, let's say, take out this, let's say if we dial down to a 15-minute or a 30-minute chart, if we were to take out this order flow out here, 77.70, then you're looking to really take out these lows from last night's close, pre-market this morning, Asia session lows at around about 77.60, and then you have a fairly good idea then if shorts are going to resume control once this area has been taken out. But very, very choppy over the last couple of hours or so. Okay, then last but not least is the DAX, which has made it back to all-time highs. Okay, so it's the only index so far that's made it back to all-time highs. This is where we were at the beginning of 2022 when we sold off. Massive rally from September, October, all the way back up in May, and we've got back to 16.3s. So now it becomes a case of how does the markets react at all-time highs? Do we break highs? Looks very much likely that it might try and do so. At this moment in time, we've got no clear validation that there's a change of trend dynamic. So therefore, at this moment in time, buyers into the highs are still in control. And that's kind of where we end the week this week. So that's it for this week, everyone. Trade safe. Have a lovely weekend. And of course, we will see you all back next week. So we'll look to do multiple videos next week just to kind of factor in where we open up. Some interesting setups really developing up in all of these markets. So that's going to be interesting. And then, of course, again, reflecting back to the economic calendar and looking at the data next week as well, more broadly. Okay. Have a good weekend, everyone. Trade safe.